Here are the key points you should take away from The Intelligent Investor by Benjamin Graham. 1. Know the difference between investment and speculation. In Ben's words, an investment is one which, after thorough analysis, promises safety of principal and an adequate return. Operations not meeting these requirements are speculative. 2. The investors have to follow strong policies involving fundamental approach. Do not follow what stock market experts suggest blindly. 3. For all small and retail investors, 10% of overall wealth is the maximum permissible amount that could be used for speculating or gambling on stocks. 4. Retail investors must stay away from initial public offerings or IPO. 5. An intelligent investor should be able to resist the temptations of following stocks recommended by stockbrokers and financial media during the bull markets. 6. Always search for the bargain issues which had recent disappointing results or subjected to negligence or unpopularity. These stocks are usually obtainable at their net asset value. 7. A sincere investor will not believe that frequent day-to-day fluctuations in the stock prices make him richer or poorer. 8. Always have a margin of safety for your investment. Choose the stocks that pay good dividends, say around 10% or more return on the investment. According to Ben, dividends are the greatest force in stock investing. 9. Stay away from the companies that make a lot of acquisitions. 10. You can benefit from the volatility of the stock prices if you understand the underlying value of the companies. 11. Make sure to invest only in companies with strong balance sheets.